have to get inflation back to target. We have to have price stability, and we've raised interest rates to do that. We've seen strength in the economy. I think there is good news in this. The economy has been more resilient, it's been stronger. We've got very low unemployment, but it is leaving us with inflation looking much more persistent. We think inflation is going to come down markedly this year, but there are signs of it being more persistent. And I thought it was right that we took this action, and this decisive action today.
Well, for what this means for households, how will this feel for many people around the country?
Well, I understand the difficulty and the pain it causes for many people, and I do understand that. What I would say, though, is that if we don't get inflation back down to target, then it goes on for much longer, and the pain goes on for longer, and none of us want that.
Some people, you've said that you'll do anything it takes to try to bring inflation down. Does that include potentially precipitating a recession?
Well, we're not seeking to precipitate a recession, and we've got an economy that is much stronger and more resilient than we expected it to be. Part of that is because energy prices have come down so much, which is good news. It's good news. So we're not expecting, we're not desiring a recession, but we will do what is necessary to bring inflation down to target.
And will you apologise for the fact that the bank has continually failed to forecast these sharp rises in inflation? Something clearly went wrong in your forecasting, and are we now seeing out the consequences of that?
Well, we've announced we're going to hold a review, and an external review of forecasting. Forecasting has been very difficult in an era with such big things going on around us. There's a war. Obviously, we've had the pandemic. We need to understand how we can best respond to those sorts of shocks. I would say, though, that within this, in terms of tackling inflation, we've now raised interest rates by nearly 5% in 18 months. So we've taken decisive action.
The markets right now think that there will be more rate hikes to come. Do you think that's fair?
Well, we will respond to the evidence as we see it. That's important. So we've been very clear today. We're not signalling what's going to come next because we'll respond to the evidence, but it was absolutely imperative in my view that we took this action today.
Do you think that it's fair to say that the UK is something of an outlier? We have the highest inflation in the G7, interest rates going up faster here than, for instance, in the US or in the Eurozone now after today's decision. Is the UK an outlier, and why?
I think when you look across many countries in the world, actually, this pattern of persistent and rather sticky inflation, particularly sticky core inflation, actually, that's the things once you take the more volatile things, like energy, for instance. You see it across a lot of countries now.
Finally, wages. I mean, you talk in the minutes about how wage growth at the moment is potentially too strong. So are people asking for too big wage increases, settlements right now?
Well, let me be very clear on this because it's an important issue. We've got to get, and we will get, inflation back to its target. To do that, I have to be clear, and we expect inflation to come down this year. To do that, we cannot continue to have the current level of wage increases, and we can't have companies seeking to rebuild profit margins, which means prices continue to go up at their current rates. But what I would say to people is we expect inflation to come down, and it's important then that price setting and wage setting reflects that, because the current levels, I'll be absolutely honest, are unsustainable.